A lot to talk about this week. We saw bullish sentiment drop below 20% for the third week in a row. It's been years since we've seen that. We also saw a ton of SPY puts hit the tape on Friday, all of them pretty far dated, so I'm going to show you that in today's video. And then a Tesla degen bull took a 900 strike call order for call leaps on Friday as well. So a pretty insane price, especially since the current price is around 250. That'd be an insane upside move. And then lastly, we saw even Jim Cramer had to turn off his comment section amid this correction just because people were giving him so much crap for everything he's been talking about and just inverse Cramer, etc. So a lot to talk about today. First one I want to start off with is the S&P 500. We had a downtrend break, technically speaking, on Friday, just because the daily and the weekly closed above this pretty basic downtrend. It is basic, but still it should be effective if we're able to open above it on Monday. And really that's the key here. If we can open above this on Monday, especially this 563.76 level that we rejected from on the close, then this is something that actually can have quite a bit of a lift all the way up to the high 570s, maybe even 580 would be the next level. So that's a substantial degree away from where we are right now, but it all is on a contingency if we can open and actually hold above this level going into the week. So that's what I'm looking for personally. If we can open above this level, like a gap up above a key resistance, which is this 563.76 level, then that's something where we can see the upside. Otherwise, if for whatever reason we gap down come Monday, let's say it opens like 559, 558, etc., you're looking at a lot more chop, potential drop to a new low like 545.73 if it were to open below. So I'm not interested in anything if it opens with a gap down of any degree. Realistically, want it to be at the very least flat with a push higher early on in the session, or even better yet, a gap up and hold above this 563.76 level. So that's what I'm looking at right now. As for the flow, like I said earlier, there was actually a lot of SPY put flow. You have to take it with a grain of salt to a degree, just because there are a lot of hedges, especially when they go as far out the money as we saw. And I'll show you here, if I filter for over $1 million orders here, you can see that all of these here were super far out the money. Maybe not super far, but a decent amount relative to what we've seen recently, like 533 strike over here for just the April expiration. That's only a month out. Over here, 531, 544, etc., etc. So it's possible, and we've seen some of these actually hit from early on in the correction. They were choosing and reaching for like the 565, 564 strike. So they certainly could hit. You just have to take these with a grain of salt, just because the context of them is a little bit less dependent on where price is, because it could certainly be a hedge. So just leaving that out for grabs, you can choose to do what you want with that. But regardless, going back over to SPY here, I'm taking this more so from a technical basis, just because there's a lot of SPY puts that we saw on Friday. Doesn't mean that it has to or has to not happen. It's all based on if we see some type of a breakout and hold here. Otherwise, like I said, if we gap down below, then we can see a fall, and potentially those could even monetize, or at least those whales could monetize those puts if we see a subsequent drop and potential capitulation. Because what's interesting so far in this move, we haven't actually seen a true capitulation yet, despite, yes, I know we were down like 10%, 11% since the highs where we had this all-time high back here on February 19th, but still we haven't seen like that move from previous time periods. And I just accidentally drew this here, but we haven't seen that move since previous time periods where you see like that wick down, or you see that large gap down to really wipe out a lot of participants. Kind of like we saw the most recently back here in August during that pullback. We saw a huge VIX spike on August 5th, and then we also saw a major gap down, and then it finally was able to bid afterwards. We have yet to see one of those days yet. Doesn't mean that it has to happen, but again, going to keep it very level based. Interesting to see though that we did actually bottom on Friday, the current bottom that is at the 0.618 retracement of Fibonacci. So if you use the reference point from over here all the way to the high, because this is the most applicable low of this sequence, this August 5th low, all the way to all-time highs, you can see we actually bottomed exactly on the 0.618 so far. Doesn't mean that it has to continue to be the bottom. I've certainly seen plenty of times where we wick down below, kind of something like this. I could draw it where you see a wick intraday, maybe like to 540 or something super low, and then get picked up. So that would suffice for some type of a capitulation move. But again, going to leave it up for grabs right now. I like it as long as it remains above the downtrend, like I mentioned earlier, especially that 563.76 level. Anything under, I'm waiting. I'm trying to trade this swing setup. I'm trying to trade the trend here. I'm not trying to trade this chop, as I always kind of preach here. So that's my plan for this week on the S&P 500. Going to Tesla. This one's pretty insane because it got ridiculously oversold by a ton of different measures. A lot of indicators pointing to oversold levels. Even something as basic as RSI has been oversold for quite a while now. And this is something that we saw actual capitulation, unlike the S&P 500 so far, where we saw over here last Monday a negative 15% day all the way down to close around 221. And then we saw after hours it went all the way down to 210. So crazy pickup so far to close the week near 250. This is something that needs to reclaim 272.21 slash this uptrend, this blue line here. And I can show you where I drive that uptrend from. It goes all the way back over here to April of 2024. You can see it's been retested 2 times already, technically 3 if you want to count over here, but we blew through it. And then we need to reclaim it, like I said. So if this reclaims, then that's something that can prove that lows are in, and we can see a lot more upside afterwards, like all the way back into the 300s soon after, maybe even mid 300s. So that's what I'm looking for. A potential entry would be once this reclaims, but that's going to take some time since we are a little bit of ways away from it at the moment. So that's my plan on Tesla, technically speaking. And yeah, I know that Tesla bull bought the crazy upside move, or at least upside potential move, just based on those call leaps. And I can show you over here the historical flow. If we filter for Tesla flow over 1 million from last week, I can go all the way down to this call leap here, and I can show you 900 strike for the June 2026 expiration. So you're looking at call leap here. Pretty unusual strike even for a call leap. Typically you see call leaps get bought either a little bit out the money, or more likely they're like at the money or even in the money. So really interesting how we saw this happen here. This was an opening order because the volume was over the open interest, and overall, again, they bought this at a spot price of 235 for the strike of 900. So really incredible here. Potential Morgan Stanley bull after they had their updated price target at that ridiculous 800 level from last week. So other than that, though, going back to the S&P 500, we saw crazy low print for 3 weeks in a row for the bullish sentiment on AAII. Also, at the same time, CNN's fear and greed index has been at extreme fear for a couple weeks now as well. I believe it's like 1.5, 2 weeks at the moment. So typically those are signs that we are near a bottom, or a bottom's going to come relatively soon. So again, going back to the chart over here, this is something that if we see some type of a bounce, if you want this to go back to all-time highs, it needs to take out a couple levels. And I definitely recommend you put these on your chart. So the first one, obviously, we need to get past is this 563.76 level. If we can do that, then we're definitely going to see some type of a squeeze. Again, I don't know the exact extent of which it will go. However, one level that I am looking at, very interested in, is 580.92. The reason I'm so interested in this is because that was the low of the previous range that we were trading within. Remember, we were range bound for about 3 months between December all the way to end of February. All this time over here was range bound price action, and the low of the range, that pivot, is 580.92. So if we were to see some type of a squeeze above this downtrend breakout, and yes, I realize there's a couple different ways you can draw this downtrend. I prefer this one because this is where the most pivots have been respected, at least the high points that you can see across here. You also can see that over here the daily closed on the level here. So yes, we traded above it intraday a little bit, but then it closed right on that level. That's why I drew it the way I drew it. You can see it was respected on Friday as well. But going back to this here, if we can stay above this, if we can squeeze a lot higher, then 580.92 would be the target. Above 580.92, it goes all the way up to 590.50. Above that, and you're going to probably see all-time highs because that would be a previous range reclaim. If I go to the daily over here, we know that with the ranges, typically you see that slingshot move out of it because we have all that built up energy when it's in the range, when we see that consolidation, and then whatever direction it chooses, it'll trend for a bit, which we've kind of seen so far. It could certainly go lower from here, not taking that out of the question like I mentioned earlier, but if for whatever reason that range is able to get picked up after that trend down or trend up move, and it's able to reclaim the range, that is super bullish in this case. The same thing would be the case if it broke out above and we fell back below. That'd be a failed breakout. But as of now, this is kind of the potential outcome that I'd like to see, as that would be very bullish and we'd see continuation all-time highs All that I do know though is if we were to trend higher to retest the previous range somewhere around here, that is the key pivot, and that is what I believe to be 580, this level over here, this 580.92 level. So that is the previous range low. If that can reclaim, you're going to see a lot more upside. Otherwise, that is a potential retest and reject spot. So it's going to be something like this rough sketch here. Go all the way back up to 580.92 is what I'm looking for. And it's either going to reject relatively hard or it's going to reclaim, and we'll see 590.50 and maybe a mini pullback and then back a lot higher. So we're looking at a pretty substantial move coming up here in the market, and it's all about how to catch it. So last thing that I do want to mention is the entries for this week. Looking for something on the 15-minute over here with, like I said earlier, a gap up above 563.76. If we do see a gap up tomorrow above this level, I'm looking for a retest add on the level with a 15-minute close below 560.11, because this is a previous pivot low intraday over here, and this is also back below the downtrend. So that means this is a failed breakout. If we were to open, let's say 565 on a gap up, retest, add that position, looking for upside from there. If for whatever reason I got stopped out, it would have to fall back under both that 560.11 level, and which is, by the way, an arbitrary hold number, so you're going to see some type of support off that. Then also it's back below the downtrend, and that would mean it's a failed breakout in this sequence. Otherwise, as long as it remains above, either bounces from my entry or maybe even goes back down here, retests the downtrend and then bounces, I'm fine with either option. Both of those are bullish in my opinion, and this is all, like I said, contingent on this opening above the downtrend. Otherwise, if we were to gap down, let's say come Monday, and it gaps down to like 559, 560, I'm not adding that position. I need to see confirmation above 563.76, because a gap down is just going to lead to a lot more chop and potential drop lower, and it kind of opens a higher possibility of that true capitulation low forming. So that's my plan for the S&P 500. Target of this would be pretty aggressive at 580.92, because again, that is the previous range low. I'd like to see some type of retest. The market tends to like to retest breakdown or breakout levels, so not a bad target, all things considered, even though it is quite a ways away from where we are right now. But that's my personal plan for this. Otherwise, as always, appreciate you guys watching this video, and I'll see you next time.